Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your co-host, Tyler Coates, joined by the lovely Daisy Coleman. We are going to be having a special show today where we will be taking a look at the newly released EMASAR trader mode, and we're going to be putting it up against some of the other most popular tools out there. One of my favorites, which is the Ichimoku Cloud, and then another one, which is very popular, the Bollinger Band. And I am interested in comparing EMASAR to those two indicators because there are similar characteristics with both of them, and I think that will help some people to understand everything that's going on. There's a lot to learn, lot that has been shared recently. So comparing it to the more common tools that people are already familiar with will potentially help those to kind of sink their teeth into what is going on with the EMASAR trader mode. And we'll also be interested in just kind of comparing some signals to see how this new tool stacks up to the others. I have mentioned that I believe this is the single best indicator that is available, and the reason why I say that is because I have used almost all of them. I mean, those that have followed me have gotten used to me keeping track of 10 indicators at a time. We'll be keeping my eye on a lot of different indicators every single day to help me keep my finger on the pulse of the market. And since getting to use trader mode, I have basically now my chart has nothing else on it. It's all that I need, which is something that never was expected to have this remove all of the other tools, and now that gives me a chance to kind of compare them and see if it's really a good idea to go ahead and take away some of these other tools that have worked so well for me for so long. So thank you very much for joining again today, Daisy. How are you doing out there in the Netherlands?
Yeah, I'm doing great in the Netherlands. Thank you for having me as your co-host again. It's evening here already. Of course, it's 9 p.m. and I had a really nice day. The weather's awesome here in the Netherlands. I was just chilling for the last few days and preparing for this show because I'm actually very curious to see how you're gonna be comparing EMASAR, which I love. I've really studied your indicator and. I hope you're also going to be critical at the same time, when you're comparing it, but knowing you will. And I don't have much else to say. I just really want to, let's get into it. And anybody who wants to ask a question directly to Socrates, you can put it in the live chat and tag me at C_days. And I'll try to pop the question in, but we don't want to make this stream too long today.
Yep,
right?
we actually do have a hard
Yep.
stop in an hour. Won't be able to go any longer than that. So just trying to squeeze in a quick show here today, and then do plan on taking a close look at comparing those. I hope to leave about 15 to 20 minutes towards the end to take a close look at the current price action. We're in a very important spot based on some of the different EMASAR zones. So we'll be spending some time to compare the indicators, and then we'll also be looking at the current price action and the recent signals, and we'll also be sharing exactly where my orders are set right now to buy, and then also where I'm looking to trim. So hopefully we got time for all of that, and without further ado, let's go ahead and dive right in. Okay. And you see that arrow there for those of you who are just wanting to know the very last part, which I'm trying to say, but here it is. That's the 15-minute buy zone is right there, and I will be explaining why here shortly. Okay, so first thing I want to do is just go over why I think the two are good comparisons to EMASAR. So I'm going to make it just a little bit more simple by removing the markers And now what we have is something that really does have some similar properties to the Bollinger Band. Like how many indicators are out there that have a kind of a band, a barrier on top and on bottom? That's pretty uncommon. I can't think of really another example off the top of my head. I'm sure there is one, but it's rare to have something that tries to keep the price inside of it on the top end and on the bottom end. So you have something that is basically trying to show you where the trends should be trapped inside, where they should move. Like basically the Bollinger Band, if you get a really big bullish move, then you would expect it to happen where the price either gets stuck to the top band or it gets trapped between the top band and the median. So let me just go ahead and get a Bollinger Band up on my chart so that everybody can understand what it is that I'm talking about. Okay, so for anybody that is unfamiliar, this is how the Bollinger Band looks. It will have the trends will generally kind of get stuck to this top band, or it will be between the median and the top band. And then what will happen is that the market will squeeze when you consolidate, and a Bollinger Band squeeze indicates an upcoming move, and the upcoming move will generally create a bulge, and that is where the trends basically are in danger of ending when you get a big bulge in the Bollinger Band. And then when they squeeze, that's when you would be expecting a volatility, and you would potentially be looking for it to be to the upside because you're squeezing with price between the median and the top bands. That would be your signal of strength. And as you're squeezing and getting a signal of strength, it will suggest that the next move should be to the upside. And I haven't really used the Bollinger Band much at all myself. I've sure tried, but just haven't found it to be very effective myself. I have seen people use it extremely effectively, and I have a ton of respect for John Bollinger, the man who put it together. The way that he is able to make calls using this has been second to none, basically, as far as I'm concerned. A tremendous amount of respect for him and anybody that is able to really successfully use this to make money trading. It's just, for me, hasn't been that great. I've struggled to kind of say, okay, here's the squeeze, here's a big move that's coming. Ooh, now we're getting a big move down. Oh, well, maybe it's just a fake out. So no, maybe it's a big move up, and then you get a squeeze again, and it's just. I haven't been able to use it effectively myself. When we get a squeeze, and I think volatility is coming, it will always seem to squeeze longer than I think. And then the fake outs that tend to occur can just make it really hard to know when this move happens. Is this the real trend, or is this just another one of these? It's a situation where I think that there's a lot there that can be used very, very effectively. But I haven't found it to be nearly as effective myself as though looking for those same things in EMASAR. So let's go ahead and take a look at what was just described. Is going to be how the trend here, instead of kind of getting stuck to the top band, it's stuck in the sky, which is the top band of the EMASAR trader mode. So you have the similar characteristic there where the big move happens, the trend happens, and it gets stuck up here in the sky and testing the moon in that sort of thing. So similar characteristics there, but what is more interesting to me is the squeeze that can occur in EMASAR. And I have found this to be a very effective way to help me time volatility. And that's something that is very important to me. I've talked about it a lot in the past. And this is a really a spot where it's easy to find these squeezes, and it's also really easy to tell what is a real squeeze in terms of when the sky gets so close to the beach that it's almost touching it, basically like the sky is falling into the beach. Here it's kind of squeezing, sure, and as it's doing it, look how well it is acting as support. So during the squeeze, you're getting the buy, sell, buy, sell, and now here's where the real signal occurs in terms of upcoming volatility is very much to be expected. We can't have this sustain for very long, just based on the math behind that, how this is set up. It just, once you get this squeeze, it is a strong indication of volatility. It doesn't tell you which direction. Similar to the Bollinger Band, we can look for signals of strength in terms of maybe there's a golden cross here, a new high, turning prior resistance into support. So we can look for signals of strength or signals of weakness when the squeeze occurs, and that can help us to understand where the next move may be. So a lot of the similar characteristics there, yet I feel like EMASAR is significantly better because it is going to be very clear to me when this squeeze is occurring, and it's also going to provide some much more clear signals as that squeeze starts to occur. So just looking back from the 25th to the 28th on EMASAR, some really nice signals as price got trapped in a range. The Bollinger Band, I mean, maybe it has some of the same signals. I don't see them. I don't know, are you buying every time it tests down here? Some people would wait for a close below and then a close back in. If you do that, you're like break even. If you're buying every time price tests the band, what is your stop loss? Are you getting stopped out here, or are you doubling down? If you're buying here and selling here, okay, that's a good spot, but let's just again compare to the signals that we're seeing from EMASAR. So here, you get the signal at the bottom of the band and the sky, and then the top of the beach, and the top of the band. But look at how here you test the top of the band right here. So isn't that your profit take? If so, are you getting back in before this next move? There's a lot of different ways to trade the band, just like there's a lot of different ways to trade EMASAR, but the point that I want to make here is how much clearer EMASAR makes it in terms of signal here, opposed to the Bollinger Band. Sure, it gets there, but the band started here, and in this whole time, EMASAR told us to look here. The band caught resistance here, and then you support, and then it starts moving up, and then once you get here, once the price gets there, now the band is there. That's the key difference. So as the price gets here to 89.30, then the band follows. Completely different than having a preemptive area where you can basically set orders and not have to worry about, basically not have to have the band get there after the price. To me, that's not going to be nearly as effective. Okay, so that is going to be showing just here on the 15-minute chart, the comparing the signals and also the squeezes. I do want to take a look at a squeeze I was paying very close attention to, posting about in Telegram, and that is this 1 hour sky squeeze that we recently saw. And notice how close the sky gets to the beach, and it does stay there for a while. Like right here's our squeeze, and then it kind of stays there. But notice how right here, when the squeeze happens, that's really where the bottom was. So just because the squeeze didn't start to diverge until the price got up here, when the squeeze started, that is when the bottom was really kind of found. And it can be, again, a little bit subjective in real time to say, okay, is this the squeeze? Is this the squeeze? Here, for me, this is clearly the squeeze, and that's what I look for, is when there's just very little open air between the sky and the beach. Now you've got a squeeze, and that is a pressure cooker. When that thing, when the pressure gets too high, that's when you get some significant moves in short amounts of time. And this was on the 26th, the 27th that we were experiencing this squeeze, and that was when I was posting some charts. Son of a gun. Let me get over to my Twitter because I was paying very close attention to that in real time, since it was in confluence with some signals that were occurring. So let me just pull up my profile very quickly, and this shouldn't be that hard. There we go.
That's okay. I'm curious what you're going to show now. I see some mouth covering things passing by, but I think it's going to look up an indicator.
Sure enough. Okay, yeah, so this was on the 26th. I just sent out a tweet that Bitcoin is forming one of my favorite setups, which is a wedge that falls into the beach. When the wedge works towards the apex, it builds up a lot of pressure, and a quick move can happen after if it confirms. In other words, EMASAR is signaling a buy. So I was looking at the 4-hour as being in one of my favorite setups, where price is falling into the beach and you're getting a bullish pattern in terms of a falling wedge. And think of the falling wedge that's like this, and as price gets closer and closer to the apex, it has smaller and smaller and smaller bounces, and it just builds more and more and more pressure. And that was something that I was seeing on the 4-hour based on the wedge, and then also was very much confirmed. And this is what I was talking about in the Telegram group: is we've got the wedge and we've got this sky squeeze, and then here we have this higher low, which is a strong signal of strength to me, and ended up even forming a bit of a big W pattern in there. And so yeah, I was seeing a handful of things that was pointing towards a move to the upside, and a move to the upside in a short order because of the pressure that was built up. It had to happen quickly, and if it didn't, the move to the downside would be sharp as well. So being very focused on timing the volatility and using EMASAR trader mode has just been much better for me than the Bollinger Band. And I'm not the best person to compare EMASAR trader mode to the Bollinger Band, because I've never really been that effective with it, and I know it is a very effective tool. And being that I am not, haven't been the one that's used it that effectively myself, it's take it for a grain of salt when I say this is better, because it would mean a lot more coming from somebody who really used the Bollinger Band effectively for a long time, and then they come in and say, wow, yeah, everything that I could do with that, I think I can do better with this. Well, that has a lot more weight, and that is where I think I am actually in a good spot to compare EMASAR trader mode to the Ichimoku Cloud. That's been one of my favorite tools. I absolutely love it, and it's something that that gives me a better, puts me in a better position to compare trader mode with the cloud. And I need to get another drink of water, so maybe shout out to the chat while I'm doing that. And
I'm chatting to Tom in the live chat. Tom's watching. He's like, hey guys, I thought you were only going to do a show on Sunday. You guys are live.
Oh, well, that's very cool. A shout out to Tone. I've been meaning to reach out to him with an email to see if we can set up a time to go through everything, because I think I'm really interested to have him take a look and hear what he thinks. So glad to hear that he's tuning in.
I think you can dedicate a whole long show on that.
Oh, that's for darn sure. But yeah, I was been meaning to do that here this last couple of days, and I'll make sure that happens.
It's good to know that Tom Pace is watching this live stream live now. Now we need to get more viewers, because we have a very important YouTuber watching our show.
That's what I like to hear. All right, so we compared the trader mode to the Bollinger Band, and I showed why why I think that the squeezes are more effective with this. They're just more easy for me to identify when an actual squeeze is really happening and that a volatility should happen very soon, opposed to a squeeze that may or may not be able to squeeze much more than it already did. And then also how the signals in trader mode were looking a lot better, at least to my eye, when we looked back here. We're in a range, and in general, Bollinger Bands work best in ranges. At least that's how it was taught to me, was that if you're in a range, Bollinger Bands are going to work very well with Bollinger Band kind of going sideways, the top being resistance, the bottom being support, and then as the range gets to a head and the band compresses, then that will help you to identify when ranges may come to an end, and then you may want to implement another tool once a trend really does start, whether it be the TD sequential or moving average crossovers or parabolic SARs, whatever it may be. I was taught that Bollinger Bands are best used in ranges, and that is where I think that this has also been much better for me, is that not only is the trader mode very effective in trends, and that's what it was designed for, is to capitalize on trending markets, markets that move either from up to down or down to up. And then what has been so tremendously exciting to me about this is that it has been able to profitably trade in trends as well as ranges, and then it's doing so better than the best range trading tool that I know of myself. Not saying it is or whatever, but when we're in a range, one of the best tools that I would know how to use is the Bollinger Band, and we see that in the range, yes, that's a nice signal from bottom to top, and then if you're rebuying at the median and selling back at the top, that was nice, but that is not necessarily how most people are going to do it. If you're waiting for it to come back down to the bottom, then you missed all of that move, and the Bollinger Band doesn't actually get up here until price does, compared to the EMASAR signals are giving you support here and resistance here, and this is illustrated ahead of time. This is all illustrated before the price actually gets there, so much different. And then you see the signals in the range, real nice, sells and buys, and that is why I strongly prefer trader mode myself to the Bollinger Band. But again, I'm not the best to make that claim, because I haven't been using the Bollinger Band to trade profitably. I'm profitably trade that myself. So that's where I do think that the Ichimoku Cloud is something that I can, that I'm well qualified to compare the EMASAR trader mode to the Ichimoku Cloud. And for those of you that aren't familiar, I cover this on my show all the time, and it's something that there's a lot going on similar to EMASAR, but there is, it's pretty simple once you get the rules. Okay, so the other similar kind of characteristics that we have here, and I'm just going to take off the lagging span because I don't use that, and I think it just makes it unnecessary. Okay, so starting just kind of with the similarities of the appearance, and the cloud is one of the few things, like there aren't many things that have this big kind of support area that follows the trends and acts as a really strong area of support in bull trends or resistance in bear trends. So this cloud is very similar in appearance to the ocean. And let me get just an investor mode up here so it's not everything.
Maybe for people tuning in for the first time, can you just do just a quick explanation of the ocean?
Yeah, absolutely. So here, the ocean is going to be basically our area that is the estimated stop, and then it's also the area where we're looking to buy or sell, by basically entering counter trend corrections. So here we see the ocean, when it's above the price, it is a bear trend, and when you come up to test it, you get the potential, what could be sell signals, but definitely what is resistance. And if you break through it or spend too much time in the ocean, then you're going to be getting some, expecting the trend to reverse and getting some stop losses. Like right here, you got that resistance that led to continuation. And then here, you did not resist. You broke through. And now you got a reversal. And here you didn't find the support that I was expecting myself. And that led to another reversal. And then here right through and reversal. And then the area between the 200 and the ocean, that's the buy zone, which will also be referred to as the beach. So that is what comprises the, what makes up for the buy zone. And EMASAR is going to be the difference from the top of the ocean, and it'll be slightly above the 200 EMA. So when we're looking at this ocean, and let me just make it a little bit easier to see exactly what I want you guys to look at. And so this is kind of just a similar characteristic to the cloud, in terms of the cloud is going to be in bull trends below the price, and potentially good area to enter or to expect a bounce from. And then we have on right now on EMASAR is on the chart is the ocean with the 50 EMA and the 200 EMA. So right here, this setup is very similar to the cloud, and that is because the cloud has the cloud that follows the price, and then it has two basically exponential moving averages. Here we have the Tenkan-sen and the Kijun-sen. So you could think of that as the Tenkan is like the 50 EMA and the Kijun as the 200. They're not exactly EMAs, but they act very similarly. So you have the cloud telling you what the trend is, and then you have the TK cross, which will be like a golden or a death cross. And then you just look for a few things to line up, basically that the price is above the cloud and that the Tenkan is above the Kijun, and that's bull trend buy signal. And you look to basically buy dips around the Kijun or around the cloud. So let's just look at this move here. As we have gotten trapped in this range up between 8 and 10,000, we've gotten some bad signals from the Ichimoku Cloud, which is exactly what I would expect. Generally, trend trading tools are going to do very bad in ranges. They're going to tell you to buy tops and sell bottoms, and that's just how ranges work, specifically to get the trend trading guys to lose money back after those trends happen. So if we took this long right here around 7,000, we're only really making money if we didn't lose it back up in here, is kind of the way that I think about it. So if you went long around 7,000, your exit would have been the TK cross, which didn't come until this candle. So now you did capitalize on about a 12% move, something like this, 15% move. But what happened next? Here's your sell signal. You'd have the bearish Kumo twist, bearish TK cross, close below the cloud, sell at 85, and then you wouldn't be able to get out until this bullish TK cross at 91. So that's a $600 move. That is 8% or so. And then right here, you are getting a buy signal, provided that that had twisted. If it didn't, then you would wait for it too. So somewhere up in here, there would be a buy signal around 9,600 or so. And then a little bit of chop with the crossovers. And then here you would be looking to basically get out of that long around 94. So any money that was made on the way up is probably getting lost here. Now here's your next sell signal right here, 89.88, and then another one here at 90.55, and those you would be getting out of at 92. So if you traded all of the signals on the cloud, and if you're trading the cloud, you should trade all the signals. I mean, there's no reason why you would say that you're not going to take this short after a big move, unless there's some objective you could point to. So if you're going to trade the cloud and you're going to take every signal, I'm going to postulate that you broke even from here to here, because the one good signal was more than accounted for by the 3 following bad signals. And let's compare that to the recent signals in EMASAR. And we're going to get back up onto trader mode. Okay, so here is when we got trapped in the range from 10,000 down to 8,000. And instead of losing money that maybe was capitalized on earlier, and that's where we will go over where the cloud can perform better, where the benefit is to the cloud. But here, instead of getting chopped around in the range, you're getting really, really good signals, kind of like we saw on the 15-minute with the buy signal right here at 82 and right here at 82.24. Take profit signal here at 99.29, right on that wick, and then more buy signals to buy back in down here at 87.13 and 87.13 basically 2 times. Took all those signals myself personally, and now we are nearing the top of the sky. So much, much different than the signals that we're looking at in the cloud, where the cloud is telling you sell here at 85, EMASAR buy at 82, and then cloud buy up here to basically get out of your short and go long, whereas EMASAR was on the right side of that trade, telling you to buy here and sell here instead of sell buy. So that is a good example of how EMASAR should do much, much better than the cloud in ranges. When you enter a range, the cloud is going to really have trouble. And where it's going to make up for that, potentially, is being quicker to react. The indicators that have the most trouble in ranges are generally going to be the ones that provide the first signals when it really is the ranges. It really is a trend, and that's the balance. Is you want something that doesn't wait too long and wait for too much confirmation and wait for 20% of the trend to blow you by. And then you also don't want something that is too quick to react. When looking at the signals towards the bottoms, like the recent bottom, the Ichimoku Cloud is going to be signaling longs way before EMASAR, but it's going to be doing it at the expense of really trying to predict too soon, not wait for enough confirmation, is at least the way that I view it. So we're just going to pull back. Before we pull back up the cloud, let's take a look at the bad signals recently that came from EMASAR. That again, I took myself. So here we looked at the good signals on EMASAR compared to the bad signals on the cloud, and here we're going to look at where I went short because price entered the beach with the ocean on top. We've got a bear trend, so I go short in here around 71.50, and I had one that was a break even. The first short I entered, I think it was in here on these wicks, and then when this moved against me, I set an order to get out at break even. Right there, I'm out. And then here I re-entered, and this pop is what got me out at a loss, and that was a small loss. The first one was about break even. This one would have been it wasn't the top wick. I remember around 5%. We'll call it 7%. So that for me is a very reasonable loss based on, in general, I'm expecting about 10 to 15% risk when I trade the 4-hour chart. So I had one break even and one very reasonable loss. And then the cloud would have, and so just look at how long it took the 4-hour to finally signal a bull trend. Very uncommon. This was very weird. One of the strangest setups I've ever seen. And here, it took a long time for EMASAR to turn bullish. So this would be a really one of the worst spots for EMASAR in terms of how much confirmation it actually did need before turning bullish. This was maybe on the side of being too much, but you just can't. It's a give and a take. You can never be perfect. And once you think you have the good balance, then the market does something you've never seen before, and it makes you start to wonder. So here we have the cloud turning bullish around 6,000. So the cloud gave you a buy around, I guess it would have been this top right here, 66. And here's your sell. Like one close below really would have got you. So again, it is quicker to try to kind of react to signal the bull trends, but look at the signals. If you're trading it how it's meant to be traded, you're buying here, you're exiting here on the TK cross, you're shorting here at the exact bottom, so you bought the top and sold the bottom, even though it did recognize an upcoming bull. Yeah, it's and that's how these markets will happen, is they'll know exactly where they need to go to get people trapped in and out. So it was quicker to react, but it is much worse at doing what EMASAR was originally designed for, and that is avoiding getting trapped. These traps that occur so frequently in the markets that the markets know exactly where they need to take it to get everybody stopped out, whether it's a hard stop or not. So that was the original foundation of EMASAR, is how can we have a stop loss in crypto that is not too quick and not too slow. If you wait for too long, you could really hurt yourself, but if you go too quick, then these types of things can happen. So while the cloud was much quicker to pick up on this reversal, saying that, okay, bear trend, now it's a bull trend, it did it and gave nothing but the worst signals that it could, telling you to buy the top and sell the bottom. And then it gets a little bit choppy in here, and potentially this whole run up, you're not making any money using the cloud, because you are selling here, buying here, selling here. So there was a tiny win, but then you go short here and have to get out here for losses, and then you come down and short here, close below the cloud, and then get long here. So this whole time, this whole way up, you're getting bad signals. And what is EMASAR doing? It's just telling you to wait. It's telling you to be patient. And that's a big key to EMASAR, is the whole time it's saying, it's like, yeah, you know, there's room for this to move up, which based on the cloud, like this would be a bull trend from here to here. But based on EMASAR, that's just a counter trend correction, that the prevailing trend is bearish and that counter trend corrections are what we wait to sell. And this is no man's land. When we're here without any position necessarily, like, which is where I found myself, it's no man's land. And if we try to long these dead cat bounces when there's still no reason to believe it's anything more than a dead cat bounce, you're going to have a bad time. And even if it turns out that it is a reversal and not a dead cat bounce, you still are probably going to end up having a bad time. And that's where I am so fond of how this recognizes and identifies the trends, is that it tells you basically when to wait and look for low probability, low risk shorts. Probability, maybe it's 50-50, maybe it's a little better, but the bottom line is that if it goes against us, we're right out. And if it goes in our favor, you have a lot of room to go in your favor. If it goes against you, just a little room and you get right out, and you're not too worried about traps. When you get out, you see the market continue enough to believe that the traps are worth it when they do occur. So while the cloud did do a better job of signaling the reversal down in here, it didn't do a good job of capitalizing on that. And by the time the market got all the way up here and the cloud did get one nice trend, it ended up losing it all back by getting chopped in and out. And that's where I do believe that the cloud is extremely effective, but it's something that it's become so effective that the market makers know how to game it, and they know where to drive the price to really screw with that. And maybe that's where you come up with some really unique innovations. Like that's where I've become so effective at using the fibs, now is based on what I've learned from Fibbo Swanee. Before I really struggled, but he had some really unique approaches. Like here, for example, what if you have a rule where it's 2 closes below the cloud that cause you to enter the short? If you just have that one simple change, it probably would have really removed a lot of those bad signals. So there's some things that can be done to really change the effectiveness of some of the just traditional signals that we were going over. And I do want to quickly look at doubled settings, because I know that that is very popular for crypto, and I don't use them or like them myself. But if I can figure out where I wrote down, here we go. Do want to just take a quick look because that is meant to minimize that chop and make it more of wait for more confirmation, that sort of thing. So we're going to change the conversion line to 20.
I get you doing this because a lot of people in the live chat are asking you about your settings on the Ichimoku Cloud. So guys, what you doing?
Good. I'm glad to hear it. So this will maybe not be the best example of why I love the traditional settings, but it is good to compare because this has definitely been giving some good signals using the doubled settings on crypto. So yeah, that is something that this recent run has done really well with the doubled settings, but over the last few years I've noticed the traditional working much better. So we can take a look at that, and let's see. Just go back through and compare what we just did. And here we do see a lot. Yeah, this is interesting how much better it is working as of late. And maybe it's something for me to pay attention to. So here, looking at this is your sell signal still. Take profit, not short. Your take profit is you get in a trend, it moves in your favor, and then you get the TK cross. That's your take profit. So at first I was thinking this might be telling us to buy near support like EMASAR was, but that's not my view because we get the TK cross, so this is a sell. And you would wait for the close most likely, so that would be 86.33 is your sell, and then you can't get back in until you have everything lining up with a bullish TK cross and bullish cloud and everything like that. So that doesn't happen until here. That is your buy, again right at the top, 98, and then you come down and would be selling on this TK cross. So you're selling at 91, buying at 98, selling at 86, and then about ready to buy again. If this TK cross happens with price above the cloud, that would be another buy signal, and for that to happen, price would need to be above the Kijun 92.75, and it could get up to like 98 before that happens. Those are still pretty diverged. So basically you in the range had to take profit at the bottom, buy the top, and then exit your long again at the bottom, and now potentially get another signal which will probably be towards the top. I am thinking that a little bit of resistance from here makes sense, and then another return down to here. So if we do come up here and resist this, that's probably going to be right around the time the doubled settings are going to be telling you to buy. Definitely the signals to counter trade in a range, but that's okay because look how well it did in the trend, telling you to basically short this thing all the way down, and then here it gets jumbled, and this is where it's kind of telling you to wait, saying okay, let's wait for close above the cloud, let's wait for a bullish TK cross, let's wait for a bullish Kumo twist, and once we have all of that, then you've got what you need. So right in here I think that would happen. Depending on how you trade it, you might exit on a re-enter of the cloud, but then you get some really good signals, I think, at least. So buying, here's your TK cross, buying 67. You get the TK cross here around 69. So you really didn't get any of that. And then you don't have to short the bottom. That's very important. Here you buy 71. You're out at 67. That's a loss. Here you're into, this is going to be the good trade, into 69.50, holding until 86. So this was much more profitable using the doubled settings on this recent action. And again, it's been just very, very weird, unique action. So it actually doesn't necessarily surprise me that this would be a spot where the doubled settings are providing better signals than the single settings. But even then, it's just not going to be as profitable as it looks, because so in here, we did get the one good signal was right here to up here, and this all depends on how you trade. This is how I've learned it.
But you're doing hindsight trading right now, which always makes you profitable when you look back in time.
Well,
But
that's
you
a
just
very
take that
good point.
signal at that moment. Yeah.
That's a very good point. That if you would have had to execute all of these exactly right at exactly the right time and execute perfectly all of them, and then maybe you would have made a little bit, but still, like Daisy says, it's so easy to look back and say, okay, yeah, of course I would have bought exactly right here, exactly when I needed to, and of course I wouldn't have been asleep. But in real time, to actually execute all these exactly perfectly ain't gonna happen. But even if you did, you're still not making that much. You get the one good signal here, and that is fully chopped out afterwards. If you're taking all these signals, it was basically losing, one good win, losing, and the losses are making up for the one good win if you trade it exactly perfectly, in hindsight. So I do love the cloud, and I do love traditional settings. The doubled settings are something I wanted to compare to because I know a lot of people are interested in that. And while the doubled settings have been performing a little bit better recently, it's still, I would be hard pressed to think that that it would have been profitable to trade every signal on that over that last run. So that leaves us about 12 minutes left. I want to.
Yeah, I was gonna say. So you went through some comparisons, either other indicators are either lagging or running ahead too quickly. EMASAR balances it well. I mean, it's pretty obvious to me. I hope people even can also see it when they look at your indicator. But I think a lot of people also in the chat would really like you to watch at the current price action because Bitcoin pumped today.
And yeah, there has been a lot that I've been paying very close attention to. Have some orders set to buy, looking to take some profit as well, and all based on EMASAR. So in the last show, I'm sure we covered this long signal, and then I think this was the last show we did. Was hoping that long signal kind of provided a bounce. When it didn't, we got some really nice signals of strength, and I was able to by pretty good amount down in here. And now I have been, what I was really looking close at yesterday was this close above the 50 EMA. When this beach kind of buy signal gets a little bounce and then it gets rejected from the 50, that's when I start to get worried. And when it gets above, it closes above and stays above, that's when I start to get really interested in continuation to the upside. So I am expecting a return down to around 9,200, and I am looking to buy that, and I will share why. First, I need to get the markers back on. The markers are the horizontal areas of support and resistance. And notice how this last run-up came up to this marker perfectly. The wick resisted that, I mean, to the penny on the 1 hour chart. This was the area that it tried to support, and this was looking really good in here to me. And then when it broke down below, turned it into resistance. Now things are starting to get scary, and this was the time where we really were within a whisker of this thing reversing. It spent so much time down in here that it was, I can't believe it didn't reverse. And it held on, kept us bullish, and this is where the new conditions of EMASAR have been so powerful, and why I think it works so well in ranges is basically what we're seeing right in here, where you notice how it's signaling a bull trend, but the whole thing is moving kind of down or sideways. Just look at the buoys right here and the angle of the ocean. It's moving down, and that's what allows it to kind of hold on as this comes down in here. the whole thing doesn't reverse because EMASAR is recognizing this as a range, and it is recognizing that by showing the trend as bullish, but the whole thing moving down, moving counter to the trend. Trend bullish, EMASAR, ocean, beach, sky, all moving down. That's a sign of a range. And here we are back at the critical horizontal and resist that down to the penny. And now we've got a golden cross coming in. So I wouldn't say that we're so far away that we need to pull back and into it, but I do think a 50 EMA retest is likely, and that is going to be the 15-minute chart is going to be determining.
Oh yeah. So about the 15-minute chart, somebody from your chat is asking, could you take a look and tell us why the bull trend disappeared this morning when the price was continuing to make higher highs and higher lows and was remaining above the moving averages? And so that's the question, why it disappeared.
Yeah, so I think he might have been slightly mistaken if he was saying a bull trend disappeared, because this was actually a bear trend where we have the beach and then the ocean and the horizontal that does hold as resistance, confirming the reversal and saying that it shouldn't range. It is actually a bear trend. We go down, and then here is where it reverses from bearish to a no trade. Well, it's not a no trade zone. It used to be. Now it's called purgatory, and it's not a no trade zone anymore because it is tradable. And we do see these areas of support and resistance. We never tested support. We resisted here, and then this line was very critical, as was the moving averages. So a lot of ways that this zone could be traded. So we did enter purgatory after spending too much time up in here, and then after that we took off and created a new high, and that is what turned the trend bullish. And this is where I look to buy a pullback. This is basically the perfected setup for me, and it may or may not work out. It's just it's good to know what are your best setups and what are your worst setups, and what's something in between. This would be my best setup, at least one of them. I mentioned the falling wedge that goes into the beach as being one of my best setups, and that is this is another one where you have the marker in confluence with the beach and with the 200 EMA. This is exactly what I look for. When we get a reversal into a bull trend, I want price to be above the marker to confirm the reversal. And if that does confirm it, then the next pullback will generally have that marker somewhere in the area of the beach, and that is very much reinforced support and or resistance. So looking for basically 9,200 down to 91.75 is where I've got some orders layered for just like a more of a day trade type of situation, and I am really liking this setup that we're seeing right here. That's basically what we're seeing on the 4 hour, or what we did recently, which is why I've been so interested in this.
Are you trading that on two accounts then, so that you have a 4-hour account and a 15-minute account?
Absolutely. I will have a swing trading account, like a position trading account, to trade the 4 hour, and then in terms of a 15-minute account for the lower time frames, I really pay attention to the 15-second, the 2-minute, the 3-minute, one of those two. I don't need both, and then the 15-minute. I'm looking at a number of time frames for things to line up when I'm looking at some smaller time frame stuff. So definitely have separate accounts for my swing trades and my shorter time frames, and we are seeing some good confluence in that in the lower time frames as well as with the higher time frames. So that's really important to me. And this is where we had that. What we're seeing on the 15-minute is right here with the price, basically where you have the marker and the 200 EMA / beach right in line with each other to reinforce the support and confirm the reversal. That is the perfected reversal for sure, and then that's very similar to what I'm looking at right in here. And another reason why I think it should come down there is the 2-minute has entered a storm, and I posted in the Telegram group as price was up around here, saying that looking for a return to around the 92 area, and this is a big reason why. The 2-minute has been working very well as of late to call reversals when it gets to a storm, and it'll just happen sometimes where some time frames are just working very effective. So here we got a storm that immediately reversed when price came down and tested the moon. And then before that, I believe I remember seeing a few more. Here we have a storm that leads to the consolidation and then leads to the reversal. And that is something I've been seeing pretty consistently on the 2-minute. Here's a storm that leads to a reversal shortly thereafter. So that's why I'm paying close attention to this time frame right now. Is the storms have been a very effective way to time the EMASAR reversals, and that is what I'm going to be expecting here. If we enter a storm and we consolidate like this, and then we take out the local highs, that invalidates it, and it's actually a long, potentially a long signal. So if we take out these local highs, then I would expect another leg up. But I do not expect us to take out these local highs in this storm. I think that'll be a good spot for a reversal to occur. And you can set alerts. That's something that I do consistently to let me know when this happened. I was alerted right away, and that's very important. So if you just go into alerts, go to condition, go to EMASAR for the alert right there, scroll down, and then I will set an alert for the storm, and then I do once per bar close, and I do open-ended, so it won't expire. I just set one alert, and it tells me every time a storm happens. And I change the message. We can't figure out how to change the message. I don't think it's possible right now, so you just have to manually come in and do 2-minute BTC storm so that you know what the signal, the alert, is actually telling you. So that's how to set the alerts, and doing that on various time frames is very effective. It can really help to make you aware of when these storms are happening, because it's when they, specifically on higher time frames, when they happen, you can just completely be oblivious to it because months go by. We looked at the 2-minute storms, and here is the 4-hour. When we get it, that's very, you got to be on your toes, and it can be a really good opportunity to start expecting a reversal if you know when it happens. If you don't get an alert, it can be very easy to miss out on this storm happening. So a really powerful indicator for major tops and bottoms on higher time frames, and then on lower time frames just for like the scalp tops and bottoms, I would say, the swing tops, the local tops. But on 4-hour storms, that has been a really, really powerful tool for identifying reversals, and something that I would recommend have an alert set on that, as well as some of the other time frames that you guys like to trade. And with that being said, we are at the hour mark, and I appreciate everybody for hanging in with us and chatting. I can take maybe a quick question if there's anything you want to run by, or if not, it's a good time to call it a day.
I'll be quiet. You say.
Oh no, I was just if you got any questions, and then we can do one real quick. If not, then it's a good time to call it a day.
Well, I think it's a quick one. Somebody just asking how you can join the Telegram group, but this is a closed group which you only can get into when you buy the indicator, right?
A perfect question to end the day off with, and that is exactly right. If you guys go to Sawcruhteez.com, there should be a link in the description, and the homepage will describe the investor mode, which is currently what is available. And if you buy investor mode, you get access to trader mode for the rest of the year. And right here, trader mode will tell you what it's about and how it's used. There's 15 different charts. There's a live trade. There is basically everything that you need to know to trade this thing has been outlined on the website. It starts with how do you identify a trend, and it ends with basically very good foundation for setting up rules. And I will be doing a webinar on the 6th of June. It's going to be really exciting, I think. I got a lot of really good stuff to talk about, and it's going to be 2 parts. First part is going to be 4 hours on the 6th, and then there's going to be a follow-up session a little more than a month later to really see how things are going. I think that'll be the more important session after you learn stuff in a classroom setting and then you go get to put it to work in real time. That's when the rubber really meets the road, and that's when there's really going to be a lot to learn from. So we'll be going over in the first session, talking market theory and kind of not just what the signals are, but why they are occurring, where they occur. Going over some important charts, going over markers, buoys, and moons, how to use them to confirm and veto signals, to identify strength of trend, how to use them to enter hard stops, take profits, set targets, and predict reversals. It's an all-in-one indicator that we will be diving in deep to the most important parts during the webinar. There's a lot of free stuff out there available for those who are more interested in just putting it to work themselves, and that is definitely encouraged. And then the last couple hours, we're going to be looking at some setups. Like today, you guys heard me talk about some of my favorite setups: falling wedge into a beach, marker with a beach in confluence, sky squeeze. There are a number of setups that I have found to be much more profitable and reliable than others, and this is where I will be sharing those. And then very importantly, how to distinguish from a moon that signals the start of a trend and one that signals the end of a trend. Very important. If you reach the moon early, it can signal a big upcoming trend. If you reach it late, it might be the end. How to trade in purgatory, and then the last hour will be I'll be providing a set of objective rules that you can be stapling on your wall and knowing exactly what to do at any time, because the rules will be fully comprehensive. And yep, so that will be the first session, and then in between these sessions I'm going to have a separate Telegram group that is going to be a no reply Telegram group where I just am sharing my weather report, which is the daily process that I go through, and it is basically what I'm going to be talking about is sharing the strategy, and then the most important part is going to be for people to set up a process, and that's going to be in the interim between the first and second session. It's going to be for people to really start to establish a process of their own, and I'm going to be sharing my process, which is I'm calling the weather report, and that is my live analysis of live markets in real time each day. So I'll be sharing that for that next month in order to not necessarily spoon feed people signals or anything like that, but to help them start to see what it takes to really, make this work on a day-to-day basis, and see what it takes to really establish a reliable process. And then by the end of that, people that are really following along, putting in the effort themselves, I think will have everything that they need to go ahead and just basically do what it is that I'm doing. Here's an example of the weather report. It looks like complete gibberish to anybody right now, but it won't. And if you want to go through, I've had a little key here. So what's that?
It makes complete sense to me.
Yes, it makes complete sense to Daisy. So I love hearing that. And yeah, you'll notice that after all this gibberish, I come to a nice, clean conclusion that tells me what it is that I'm looking for on the various assets. Like my analysis on Bitcoin recently, the time to send it is now. Pretty good conclusion. All right, so that is going to do it. Come check out the website to get more information about the intro webinar, the process, and the follow-up webinar. And here is the same process to buy. It was the same with the indicator. I'm getting a much better process set up, but until then, just send some BTC, send me an email, and I will get you registered. So that is got me running a little bit late to a meeting, but that's quite all right. I appreciate you bringing up what I had written down to talk about. I always forget to shill stuff at the end, so thank you very much for that question. Thank you everybody in the chat and who is watching afterwards. Really appreciate your interest and support. Anybody who you think would find some value here or would be interested in trying out EMASAR, send them to this video as well as the last one. I think that it's something I'm really excited about, not only trading myself, but seeing how other people are putting it to work. And I've already seen some really interesting back tests and approaches in the chat group. So keep up the good work, everyone there. And with that being said, thank you, Daisy, for joining us. And I think we should plan on catching everybody on Sunday for our regular show.
Yeah, and I think you have to promise the current watchers that you will be covering gold on Sunday.
I can promise that. We'll cover gold on Sunday.
Okay.
And
there's so many people asking this.
Well, let me send a quick message, and those that are still waiting, just because I know most people have already tuned out as soon as I start shilling stuff. So those that are still waiting, I'm going to give you just a 2-minute look at gold after I tell everybody that I'm going to
awesome. Are you going to make some people happier?
Okay, so I'm glad. Thank you again, everybody, for sticking around. This is a little treat for those that are not going to instantly tune out as soon as I start talking about what it is that incentivizes me to do this. And what are we seeing on gold is a bit of a perfected setup. We have the 4-hour beach. We have the marker, where price has tried to resist below it every time that it's come below. It's gotten a nice pop back. And here, I had an order set at 1700 to add to my speculative position, and that was because we had the beach lining up with the marker. So this is a spot where we got the bounce, but now we rejected the 50, which Bitcoin did not do. It broke the 50 and kept going. So here I pay very close attention in the battle between the 50 and the 200. If the rejection from the 50 leads to support from the 200, I would absolutely expect a move back to local highs around the sky, where it would be an opportunity to trim. And if it doesn't, if this thing breaks down the marker, that changes everything. So right now, it's all looking good. I was able to buy right here at 1700 due to this great setup of the beach with the marker. Love seeing that after the 200 gave way, the marker was perfect support on down to the wick. We're looking at the 4-hour on IDC, and then the bounce rejected here. So I would really be looking for support to form a bit of a higher low in here, and that's actually, we're just seeing so many similarities between gold and Bitcoin. So just look at what I'm saying here is that I'd be looking for a higher low right here, and how similar that would be to what we recently saw with Bitcoin. So you have this bounce, and then that's what I'm looking for in gold. They have really been following each other in a significant way, and gold, Bitcoin really might be leading the way. So this is what I'd be looking for right now in gold, and if that happens, then I would be looking for a little pop back to 1760 or so. And we'll definitely get more in depth this Sunday. We'll promise to take a close look at gold, and we'll expect to also be able to take a close look at the S&P, and of course that'll be a very interesting time to take a look at Bitcoin again as well. So thanks, Daisy, for keeping an eye out on the chat and making sure I'm aware of what everybody is clamoring for.
Yeah, got some Dutch people in the chat now saying Dutch stuff. Yeah, thank you so much. It's good. We kept to the around about the hour, a little bit over, so I'm happy with that. And let's do the next show on Sunday, and yeah, do a weekly close on Bitcoin and everything. Watch S&P gold, and I'm gonna have my nice evening. You're gonna have the rest of the day there in the United States, and I'll speak to you Sunday.
That sounds great. Thanks again for tuning in. It's always so much more fun to have you with me as I'm blabbering on the charts. And I know that the live chat loves to have somebody paying attention to their input, have really great followers, and get some good questions. So I appreciate you guys taking the time to ask, and really appreciate Daisy taking the time to gather those. So we'll definitely be back on Sunday. Those of you in the Telegram chat group can feel free to direct some questions towards Daisy. And in the meantime, over the next few days, the chat group can ask some questions, and Daisy will compile those so that we are ready to go on Sunday. And I will look forward to seeing you then.
Yep, just tag me.